Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, we discuss Nigeria's Q4 2025 capital importation report. Strong inflows, but weak long-term investment. Capital importation refers to the inflow of foreign funds into the economy through channels such as foreign direct investment, portfolio investment, and other forms of investment such as loans and trade credits. According to the NBS methodology, the data was compiled from fresh capital reported by commercial banks and do not include other FDI components such as reinvested earnings. In Q4 2025, total capital importation into Nigeria was $6.4 billion, marking a 27% year-on-year increase from $5.1 billion in Q4 2024 and a 7% quarter-on-quarter rise from $6 billion in Q3 2025. This indicates that foreign capital inflows remained robust at the end of the year and supported the recovery trend observed throughout much of 2025. Looking at the full year, 2025 capital importation rose to about $23.2 billion, up from $12.3 billion in full year 2024, which represents an increase of roughly 88%. This marks a significant improvement and indicates that Nigeria attracted much stronger foreign investor interest in 2025 than in 2024. However, the quality of these inflows still matters, as the majority of increase came from portfolio and short-term flows rather than long-term productive capital. A background of the Q4 2025 figure shows that portfolio investment remained the dominant component, accounting for 85.1% of total capital inflows at $5.5 billion. Other investment followed with $599.6 million or 9.3%, while foreign direct investment stood at $357.8 million, representing 5.6% of the total. The implication is clear. Investor appetite remains heavily tilted towards liquid, yield-seeking instruments rather than towards long-term capital for business expansion. Within portfolio flows, money market instruments accounted for $3.1 billion, bonds contributed for $2 billion, and equity contributed $431.1 million. On the FDI side, equity was $322 million, while other capital was $35.8 million. For other investments, loans accounted for $536.2 million, while other claims amounted $39 million. This pattern reinforces the view that high yields and fixed income opportunities continue to attract foreign funds into Nigeria. Even though FDI improved in Q4, the broader full year 2025 picture still shows weakness in long-term investment. The report indicates that total FDI from full year 2025 was about $923 million, which was less than 4% of total capital importation for the year. This means that while overall foreign inflows improved sharply, Nigeria still has considerable work to do in attracting durable capital that supports factories, infrastructure, jobs, and technology transfer. By sector, the banking sector recorded the highest inflow in Q4 2025, amounting to $3.9 billion, representing 59.8% of total capital imported. This was followed by the financing sector with $1.94 billion, 30.1%, while production and manufacturing attracted $308.9 million, 4.8%. This concentration in banking and financing suggests that foreign investors remained more comfortable with financial market exposure than with deeper real sector commitments. By country of origin, the United Kingdom remained the largest source of capital imported into Nigeria in Q4 2025, contributing $3.7 billion or 57.9% of total inflows. The United States followed with $837.9 million or 13%, while South Africa contributed $518 million or 8%. This pattern highlights the importance of established financial relationships and confidence from key international markets. By receiving bank, Stanbic IBTC Bank PLC led with $2.2 billion, representing 34.6% of total capital imported in the quarter. It was followed by Standard Chartered Bank Nigeria Limited with $1.9 billion or 28.8%, and Citibank Nigeria Limited with $840.7 million or 13.1%. This indicates that capital importation remains concentrated among a few large institutions with strong ties to foreign investors. Overall, the Q4 2025 capital importation numbers are encouraging. They show that Nigeria is regaining the attention of foreign investors and ending the year on a stronger footing. Yet, the data also shows that the bulk of these inflows remain short-term and yield-driven. For Nigeria to build sustainable growth, policymakers must consolidate macroeconomic stability, deepen confidence in the foreign exchange market, reduce policy uncertainty, and improve the business environment so that more of these inflows come as foreign direct investment rather than just portfolio flows. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, or feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed and have a great week. Bye.